A year ago, the market thought Google was finished. ChatGPT was exploding, AI search looked like a direct threat, and investors suddenly started asking a question nobody had asked in 20 years. What if people stop Googling things? But now the story has completely flipped. Alphabet just posted 22% revenue growth, Google Cloud grew 63%, margins expanded again, and Gemini is already generating an estimated $15 billion annual revenue run rate. This is no longer a company trying to survive AI. It's a company monetizing AI faster than almost anyone expected. Alphabet started 2026 with one of the strongest quarters in big tech. Revenue jumped 22% to $110 billion, while operating margins expanded by more than 200 basis points. Google Cloud was the standout, growing 63% year over year to $20 billion, with cloud margins reaching 33%. That matters because cloud used to be the expensive growth engine dragging profitability down. Now it's becoming a major profit center. The bigger surprise is that AI is not destroying Google search, it's actually helping it. Search revenue still grew 19%, driven by AI overviews and Gemini integration. The market expected AI chatbots to replace search. Instead, Google is embedding AI directly into the search experience and increasing engagement at the same time. That changes the entire narrative around Alphabet. Alphabet is expensive if you think this is still just an advertising company, but if Google Cloud becomes a true AI infrastructure business, the current valuation starts making much more sense. Morningstar raised its fair value estimate from $340 to $433 after the latest earnings report, mainly because confidence in Gemini monetization and Google's TPU strategy increased dramatically. The stock trades around 30 times forward earnings, which is not cheap historically for Google, but also not extreme if the company can sustain high teens or low 20s growth while expanding margins. The key point is this: investors are no longer paying for search dominance alone. They are paying for Alphabet becoming a full-stack AI company. Infrastructure, models, distribution, cloud, ads, and consumer products all at once. And that's a much bigger story. Alphabet's strategy is becoming very clear. Protect search, monetize AI, scale cloud. Everything revolves around that. Gemini is not just a chatbot project. It's being integrated into Search, Workspace, Android, YouTube, and Google Cloud. Meanwhile, TPUs, Google's custom AI chips, are becoming a major competitive advantage because they lower AI costs compared to relying entirely on NVIDIA GPUs. This is actually a logical strategy, not a desperate pivot. Google already owns distribution through Android, Chrome, YouTube, and Search. The company doesn't need to invent a new ecosystem. It just needs to inject AI into the billions of people already use every day. That's a huge advantage most AI companies simply do not have. Microsoft is still the biggest direct competitor in enterprise AI and cloud. Azure and OpenAI gave Microsoft an early perception advantage in the AI race, but Google is catching up quickly, especially in model efficiency and infrastructure economics. OpenAI is the psychological competitor. It changed consumer behavior and forced Google to move faster. But OpenAI still lacks Google's distribution, ad infrastructure, and ecosystem scale. Amazon dominates cloud infrastructure through AWS, but Google is positioning itself as the AI-native cloud provider. That distinction matters because enterprises increasingly care about AI acceleration, inference costs, and model deployment. Meanwhile, Meta and TikTok compete aggressively for attention and advertising budgets, especially through video. That's why YouTube remains strategically critical for Alphabet. It keeps Google relevant outside traditional search. The biggest risk is simple. AI changes user behavior faster than Google can monetize it. If AI answers reduce high-value search queries, advertising economics could weaken over time. Google is trying to prevent that with AI overviews and integrated ads. But nobody fully knows what AI-native advertising will look like 5 years from now. The second risk is capital intensity. Alphabet is spending enormous amounts on AI infrastructure and data centers. Free cash flow is already under pressure because of these investments. If AI monetization slows while spending remains aggressive, margins could compress hard. Then there's regulation. Alphabet still faces antitrust pressure globally. Even though recent rulings were less destructive than feared, regulators continue targeting Google's search dominance and distribution agreements. The upside scenario is massive. If Gemini becomes a dominant AI platform, Google Cloud keeps compounding above 40% growth, and search successfully transitions into AI-first search without damaging monetization, Alphabet could become even stronger than it was before the AI disruption scare. That's the part many investors missed. AI is not just a threat to Google. It might actually deepen Google's moat. Because once AI becomes infrastructure heavy, scale matters even more. And almost nobody has Google's combination of data, distribution, compute, engineering talent, and advertising infrastructure. Alphabet is no longer just an advertising company pretending to be an AI company. It's becoming an AI infrastructure company that also happens to own the world's most profitable advertising machine. That's a very different investment thesis. This stock is for investors who believe AI will consolidate around a few dominant ecosystems instead of fragmenting into dozens of winners. If that happens, Google has a real chance to remain one of the most important companies in the world for another decade. The market thought AI would kill Google. Right now, AI might be making Google even stronger. I'll break down the next one soon. Subscribe if you want to stay ahead.